Ever pondered over how the financial performance of AMC squares off against that of Netflix? Today, we're diving deep into the financials of these two leading entertainment corporations in the United States. AMC, known for its expansive cinema chains, and Netflix, the streaming service titan, both hold significant stakes in the entertainment industry. However, their financial landscapes tell different stories. In recent years, AMC has faced challenges in maintaining growth, particularly during the COVID-19 pandemic in 2020 and 2021. Conversely, Netflix has enjoyed a continuous growth trajectory, with a compound annual growth rate of 17% over the past 5 years. As we explore the revenues, profits, assets, and operational efficiency of these corporations, we'll uncover the intricate details of what's behind these numbers. So, whether you're a seasoned investor or just curious about the financial health of these entertainment giants, you're in for a treat. Stay with us as we delve into the financials of these two giants. Let's begin by examining the revenue trends of both AMC and Netflix. In the last 3 quarters of 2023, AMC generated $3.7 billion in total revenues, while Netflix raked in a whopping $25 billion. Now let's take a step back and compare these figures to those from 5 years ago, in 2018. The compound annual growth rate, or CAGR, serves as a useful measure here. Over this 5-year period, AMC's revenues have been shrinking at an average rate of 2% per year. Meanwhile, Netflix has been expanding at a rate of 17% per year. This stark contrast is a testament to the diverging fortunes of these two entertainment giants. Now it's worth noting that the revenue trends were not always this divergent. Pre-pandemic, both companies were on relatively solid footing. However, the COVID-19 outbreak in 2020 and 2021 dealt a heavy blow to AMC's revenues, from which it has struggled to recover. On the other hand, Netflix's business model, which is centered around digital streaming, proved to be more resilient. As lockdowns and social distancing measures kept people at home, demand for online entertainment surged. Netflix, with its extensive library of films and TV shows, was well positioned to cater to this demand, leading to a sharp increase in its revenues. In fact, Netflix's revenue has consistently grown over the years, even amidst the turbulence of a global pandemic. This is a testament to the strength of its business model, which has proven to be adaptable and resilient in the face of adversity. On the other hand, AMC, with its reliance on physical movie theaters, has been hit hard by the pandemic. Despite efforts to pivot to new revenue streams, the company has struggled to maintain growth. This underscores the importance of adaptability in today's rapidly changing entertainment landscape. In conclusion, Netflix's revenue has consistently grown over the years, while AMC has struggled to maintain growth, especially during the COVID-19 pandemic in 2020 and 2021. Now let's dissect the revenue structures of both AMC and Netflix. Diving straight into it, AMC's revenue is divided into 4 main streams. The lion's share, a significant 56%, comes from admissions. This is the money people pay to watch movies in their theaters. Next up, we have food and beverage, which makes up 35% of their revenue. Think popcorn, soda, and the likes. Screen advertising, the ads that run before the movie starts, contributes a minor 3%. The remaining 6% is grouped under other. This could be anything from merchandise sales to special events and promotions. On the other hand, Netflix's revenue structure is geographical. 44% of their total revenue comes from the United States and Canada. Europe, the Middle East, and Africa contribute 32%. Latin America chips in with 13%, and the remaining 11% comes from the Asia-Pacific region. It's interesting to note how Netflix's revenue is spread across the globe, reflecting the platform's wide reach. Now, comparing the two, we see a stark contrast. AMC's revenue is largely dependent on physical, in-person experiences, people going to the theaters and buying concessions. This model was particularly vulnerable during the COVID-19 pandemic, which largely explains their negative 2% compound annual growth rate over the last 5 years. Netflix, however, operates in the digital space. Their revenue is subscription-based and spread across multiple geographical regions, making them less susceptible to localized disruptions. This has likely played a role in their impressive 17% CAGR over the same period. In summary, AMC's revenue streams are heavily reliant on in-person experiences, while Netflix's are diversified across different regions worldwide. The difference in their revenue structures aligns with their respective business models, one rooted in traditional cinema experiences, and the other in digital, on-demand streaming. As you can see, the revenue structures of AMC and Netflix are quite different, reflecting their unique business models. Next, we turn our attention to the net profit margins of AMC and Netflix. Net profit margin is a vital indicator of a company's profitability, showing how much of each dollar earned by the company is translated into profits. AMC's net profit margin for the last 3 quarters of 2023 was -6%, a significant deviation from the negative 73% average of the previous 5 years. This suggests that AMC has been operating at a loss, with expenses exceeding revenues. On the other hand, Netflix's net profit margin for the same period was 18%, slightly above its 5-year average of 15%. This indicates that Netflix has been successful in managing its costs and generating a profit on each dollar of revenue. Let's now delve into the net profit figures. For the last 3 quarters of 2023, AMC reported a net loss of $200 million. This continues the trend from the past 5 years, where AMC's net profit has remained in the negative territory. Netflix, however, reported a net profit of $4.5 billion for the same period. Since 2018, Netflix's net profit has been on an upward trajectory, growing at a compound annual growth rate of 33%. This consistent growth in profits over the years underlines Netflix's robust business model and its ability to navigate market fluctuations successfully. In summary, while both companies operate in the entertainment industry, their financial performance paints 2 vastly different pictures. AMC has been grappling with negative net profit margins, indicating a struggle to turn revenues into profits. Meanwhile, Netflix has been consistently profitable, with a steady increase in its net profit margin over the past 5 years. Despite AMC's negative net profit margins over the years, Netflix has managed to steadily increase its net profit margin. In the realm of operational efficiency, how do AMC and Netflix fare? Let's crunch some numbers, starting with receivable days, which is the average number of days that a company takes to collect payment after a sale has been made. For AMC, it's 11 days. Now here's a twist: Netflix has a receivable days count of 0. Yes, you heard it right, 0. This is largely due to the nature of their business model, which doesn't include accounts receivable. Now let's talk about operating cash flow, which is a measure of the amount of cash generated by a company's regular operating activities. For AMC, the operating cash flow stands at a negative $100 million. This negative figure suggests that AMC is struggling to generate cash from its core business operations. On the other hand, Netflix boasts an operating cash flow of $5.6 billion. This positive figure indicates that Netflix is efficiently generating cash from its main operations. Next up is free cash flow, which is the cash a company generates after accounting for cash outflows to support operations and maintain its capital assets. Once again, AMC's numbers are in the red, with a negative free cash flow of $300 million. Netflix, meanwhile, demonstrates a robust free cash flow of $5.6 billion, mirroring its operating cash flow. Lastly, let's look at the ratio of operating cash flow to net income, which provides insight into a company's ability to convert profits reported on the income statement into cash from operations. AMC's ratio stands at 0.5, while Netflix's ratio is a solid 1.2. This suggests that Netflix is more efficient at converting its net income into operational cash. Netflix's strong cash flow growth over the years starkly contrasts with AMC's negative cash flow. This difference in operational efficiency might be a key factor in the company's contrasting financial performances. So, when considering an investment, one might want to take these factors into account. Finally, let's consider the return on equity, ROE, for AMC and Netflix. The ROE is calculated by breaking it down into 3 components: net profit margin, asset turnover, and equity to total assets. In the 3rd quarter of 2023, AMC had a negative 13% ROE, a negative 6% net profit margin, a 0.55 asset turnover, and a 4.11 equity to total assets ratio. On the other hand, Netflix boasted a 27% ROE, an 18% net profit margin, a 0.68 asset turnover, and a 2.24 equity to total assets ratio. These figures clearly show that Netflix is outperforming AMC in terms of return on equity. This is a crucial factor for investors to consider, as it represents the efficiency with which both companies are using their shareholders' equity to generate profits. That concludes our financial comparison of AMC and Netflix. Don't forget to subscribe to the channel to receive the latest videos. Please comment with the business you'd like us to analyze, and we will address it in the upcoming videos.